and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Another packed agenda this morning. Peace talks between the U.S. and Iran are set to continue in Qatar this week. Here in the U.K., of course, the man expected to become the next Prime Minister is set to pledge the biggest evolution of power in modern English history. But first, let's also begin with tech. South Korea, one of the biggest beneficiaries of the AI boom, has unveiled ambitious plans to try and cement its position as a global powerhouse. To discuss all of these details, we're joined by Bloomberg tech editor Shona. We're also joined by Marieke Blom, chief economist and global head of research at ING. So Marieke, welcome to London. It's so nice having you in the studio. Shona, I mean, there's just so much of tech going on. How does Korea's announcement compare to other regional plans? I mean, they really want to be at the forefront of this.
Yeah, it's pretty big. So the two companies who have sort of spearheaded this announcement around, as you say, about $500 billion of expenditure are SK Hynix and Samsung. So they've pledged to build new chip fabs, which means the infrastructure you need to make chips. And as we know, chips are pretty integral to the AI boom because we need them to power the AI data centers that are currently being built by companies like Microsoft, Google, etc. These two companies account for 80% of the world's market share for memory chips, so they're a pretty big deal inside and outside of Korea, and so sort of it is a very large expenditure plan. It's not outside the realms of what everyone else is doing. You know, the US is spending many billions of dollars across its different companies for AI data infrastructure. You've got China with an approximately $300 billion plan to build similar infrastructure. That's more being driven by the state rather than private enterprises. The EU sadly is lagging much behind. We're talking sub $100 billion really for the EU's plans to build AI infrastructure. So the EU is sort of lowest on the list, but everyone else is in a similar position.
So, Marieke, how do you look at the EU? I mean, I guess there's opportunities in some of the smaller companies. Again, the ASML does have a kind of ecosystem, but how can Europe really take advantage of it?
Yeah, so of course for Europe it's mainly as a user, and that's the most important upside for Europe. What I believe is that there are reasons to be optimistic about that. I think contrary to some other technologies, the barriers to making use of it, so the initial investments are relatively low. Of course, you can all buy a subscription for a relatively limited amount of money. And of course Europe does struggle with the productivity issue and with tight labor markets. So in that sense, I think Europe will benefit, but if you look, of course, at the broader ecosystem, most of that is in the US and then large parts of it in Asia. The ASML's ecosystem is about more than just ASML itself, and I think, relatively speaking, of course, the fact that semicon is benefiting, at least in the AI sphere. We don't have the model builders here, we don't have the hyperscalers here, but we do have some semicon, so relatively speaking, maybe for Europe that's not too bad.
Shona, I mean, we have Mistral, right? Does everybody need the Ferrari of AI, or can Europe kind of have piecemeals? Can you have like smaller companies in enterprise trying to be the link between the Ferraris of AI and companies?
I mean, it'd be good to have a Porsche in the mix, We don't need to be the Ferrari, but it'd be good to have some other supercar in that. I think, you've got China with its manufacturing power and state expenditure power. You've got the US where a lot of the tech is, and then Korea where a lot of the infrastructure is being sort of built out of, the chips, etc. It's hard to know where to position the EU in that. So while we do have promising companies, obviously ASML is the one everyone talks about because it has a stranglehold on a certain bit of the supply chain. We probably don't have enough there to sort of compete on the global stage, and I think it's showing, unfortunately.
Yeah, I think if you look at industrial usage of AI, Mistral is interesting, and that's one of the reasons why ASML took a stake in Mistral, because they believe that industrial production, manufacturing can really benefit from usage of AI, and that's really where they see the future going. Those models may be slightly smaller. We may also benefit from open source models. So I think in that sense there are opportunities there, and I also think we should not underestimate the research capabilities that we have in Europe, although of course look at what's happening here in London. They are typically being used by the large US model builders. But I think there are opportunities there, and we should look at it with a positive lens too.
And Marieke, I mean, there's everything being thrown at us, right? It's still, we don't really know what's happening with Iran, US, the Strait of Hormuz, inflation. There's this, superpowered everything with AI. How much does your AI thinking change the perception of the economy and therefore where you want to be invested in 5 years?
I think, it's really a drastic change, but I think we tend to look a lot at the AI space itself. And I think over time we'll be looking much more at the impacts of AI, the AI users. It may disrupt entire markets. We don't know yet. It's just too early to tell. And I think we've gone from the phase where we're sort of like, there is a general skepticism about the impact of AI. People do believe that it will be impactful, but companies are slow in how they will use it, really. I mean, if I look at it, even my own team, right, we start adopting it, but it's going slower than you'd want it to go, always. But I think in 3 to 5 years' time, we'll be looking at completely different structures within services, of course. So that will really change the market, I think.
Shona, the trillion-dollar question is, when do we know if we can make the money back, right? At the moment, there's this massive race, there's CapEx, I mean, it's $1 trillion, but we also know that the technology is expensive. We know that some firms are looking at some digital tokens and saying, well, why am I paying him less than actually what he or she is spending on these digital tokens? So, where are we on valuations?
So the good news is there are signs that it is possible. So there was a report out last week by Exponential View that found that AI sales for the first quarter of this year slightly exceeded, and I am saying very slightly, exceeded depreciation costs, which is the sort of spread of spend on data centers. It's not accounting for all that money in one go. It's spreading the cost over the life cycle of the hardware. So what we have seen is that it is possible to make a little more revenue than the immediate expenditure. That could all go into reverse. That's dependent on the life cycle of the hardware, whether businesses are sort of up for paying the amount that they are for AI. There's lots of factors that could turn that the other way, but there are indications that it's not out of the realms of possibility. We're not there yet, but there are signs that it's positive.
Do you worry about it now, Marieke, or is that a problem for 2027?
The funny thing is, again, I'm looking at it from a European perspective. If those models in the end are not that profitable, that may slow the investment down initially, but as a user, of course, that's beneficial, right? It means that there's more competition in the market. There's not a huge markup. So, of course, that may lead to an initial sort of effect on valuations and so forth. But longer term, as a continent that's mostly using the models, lower prices would be beneficial. So I'm seeing that as an opportunity longer term for Europe.
Okay, thank you both. Shona Ghosh, our Bloomberg tech editor, and Marieke stays with us as we turn a little bit to the UK. Now, Andy Burnham is expected to pledge the biggest devolution of power in England later today. The former mayor of Manchester is preparing to give his first major speech since confirming his intention to succeed Keir Starmer as UK Prime Minister. Well, Bloomberg's UK government reporter Joe Mays is here. Joe, thank you for joining us. It's Monday. We're expecting, of course, this big speech a little bit later. We've heard very little from Andy Burnham since Keir Starmer announced that he was stepping down as PM. So how much do we know about what he's going to say today?
Yes, we know the broad outlines. We can expect to hear him say we need a big push on devolution. That's to say, moving power away from Whitehall to the regions of the UK, such that mayors can now be in charge of more budgets, more powers. And Burnham's view is that when you do that, you get better delivery, effectively, of government in those areas. Now, which budgets, which powers, we don't know. We expect Burnham to set some of that out. We also expect him to pitch a so-called number 10 in the north. That's to say, have part of the executive branch somewhere in the north of England, which, again, he hopes will focus and ground politicians more in what's needed in those areas rather than what's happening in the south, which often has historically been more benefited by government policy. What we don't think we'll hear too much of is things like who will Andy Burnham appoint as his chancellor. That's a really important decision for the economy, for investors. We don't think we'll get more detail on that. He might say something about the UK's fiscal rules, which up to date he said he will stick by, but then again, some of his allies have been saying he'll be seeking flexibility within those rules. You've got Lord Jim O'Neill effectively encouraging him to borrow more, to invest in infrastructure. These are these huge decisions that Burnham will have to make on the economy. I think that's what we're really looking for, but I don't think we'll get too much detail on that today. So the focus today, devolution, moving power out of Westminster, but we're looking for that nitty-gritty on which budgets and which powers.
So interesting, Joe. Thank you so much. Bloomberg's UK government reporter, Joe Mays. I know we'll all be listening to the Andy Burnham speech with us. Again, Marieke Blom from ING. Marieke, when you look at the UK, I don't know how much, we've seen some big moves in gilts. Of course, we're expecting this big speech from Andy Burnham, but then he'll be tested by the markets. He'll be tested by inflation. I mean, there's going to be a lot of challenges, especially when it comes to the fiscal situation.
Yeah.
So how do you look at the UK?
I would say he's a bit lucky there in the sense that oil prices have been coming down, so the inflationary risks are becoming a bit less over time. We don't expect the Bank of England to hike, although the market does. We would say that there is basically with these oil prices coming down and with a not too strong economic backdrop, there's no reason for the Bank of England to hike. And that, of course, will give him a bit more room. And generally speaking, I would say that the markets are so on top of UK politics, that's so different from the rest of the continent, that it's very difficult for him to completely change his stance there.
How much, when you look at inflationary pressures, right? A couple of months ago, we were worried that central banks really had to hike.
Yeah.
Does it change your view also on what the ECB does next? If you look at the UK and the ECB, they're in vastly different places in terms of the level of interest rates.
Yeah.
The economies are different, but not that different.
Yeah, true. Well, we would say that, of course, the original stance in the UK was tighter than the ECB stance, right? So the UK would have cut interest rates were it not for the war in Iran. So in that sense, that's a big difference. We believe that the ECB will hike once more, but that's part of our scenario in which we see oil prices creeping up again to levels above $80. And of course, that's a big uncertainty right now. What we see is that the market has completely repositioned over last week. So initially, there were quite a lot of speculators still in the market, keeping that oil price a bit higher for a longer period of time. And now they've repositioned to such an extent that we believe that this is a market that's oversold. So we believe the prices will go up again. And of course, that would give the ECB a reason to hike rates one more time. We expect this week at Sintra that they will sound hawkish because, of course, they want to be sure to signal to the market that they're on top of this. But I think they will try to do a bit of a wait-and-see approach there because, of course, those oil prices will be so important for the actual inflation outlook, but also for inflation expectations. So in that sense, I think they will try to buy some more time. Then again, given our current scenarios, we expect them to hike again. Yeah. But should oil prices behave differently, they will probably reconsider.
Okay, Marieke, thank you so much for joining us. Marieke Blom, they're Chief Economist and Global Head of Research at ING. Now, coming up, with Europe divided on military spending, we speak with Eirik Lie, the Chief Executive and President of the Norwegian defense firm Kongsberg. That's coming up next, and this is Bloomberg. Well, the U.S. and Iran have agreed to halt attacks on each other following a flare-up over two vessels that were struck within the Strait of Hormuz. Let's get to Bloomberg's John Hersowitz. John, talks due to continue in Qatar, so what can we expect?
Sure. We're trying to see if we can get movement on the basic of the Memorandum of Understanding. Now, the key issue is going to be the Strait of Hormuz after what happened over this weekend. Iran has talked about some sort of management, maybe in conjunction with Oman, which could involve fees being paid. The U.S. explicitly last week said that this was a red line. Trump said it. Secretary of State Marco Rubio said it. So that's going to be one of the key issues. And also trying to get shipping to return. Before the back and forth last week, there were about 70 ships that made a daily transit. The weekly average before the war was about 135. There's caution in the shipping industry because of the attacks that happened over the weekend. So key issue, and then all the other issues from nuclear to sanctions relief. A lot on the table.
Thank you so much, John, for the terrific briefing. John Hersowitz there with the very latest on Hormuz. Now, European defense spending remains divided, especially within southern and western countries that are struggling with tight national budgets. Now, as NATO prepares to convene in Ankara next week, focus now turns to how Europe can rebuild and advance the defense sector. Well, I'm delighted to be joined by Eirik Lie, the Chief Executive and President of the Norwegian defense firm Kongsberg. So, Mr. Lie, thank you for joining us. When you look at European defense industry, are they in a place where they can actually scale up and meet the demands that NATO leaders have said fast enough?
Yeah, I think, we've seen definitely improvements throughout the last year. We can see it from the budgeting, but we also could see it from an increased spending on, building up capacity. We are not at the level that is needed, but we see a positive movement forward to achieve some of the targets. But what we definitely see is that the need for spending to increase capacity is definitely built into many of the governments in Europe.
What are the main AI-driven changes for modern defense systems in which Kongsberg is fully focused on?
Autonomy combined with artificial intelligence is really important for Kongsberg going forward when it comes to looking at the technology. We are involved in a lot of these things, both underwater, but also on ground and in the air, and also as part of our air defense system. So AI is part of the equation when it comes to get good solutions for providing the soldiers with the best tool that they can utilize.
But Mr. Lie, so when you talk about autonomous or autonomy or unmanned systems, will they be the bulk of what you're selling and doing in 4 or 5 years? How much is that acceleration?
I think we will see a trend that more and more autonomous system will be fielded, because you don't want to put soldiers in the front, and I think that will save lives. At the same time, this technology-driven effort needs to go hand in hand in having control. So I think this is the technology is going forward in that area, and I think also that the different armaments in Europe taking that direction as well.
How do you see your company changing in the next 5-6 years? If we look, for example, at the naval strike missile, how much of revenue and how much bigger will that be in the next, 5 years or decade?
We have seen a scale-up in our strike missile capacity, both for naval strike missile and also joint strike missiles to be part of the F-35 fighter jets. And we saw this started back in 2018, and we have a really steep demand for our missiles. And that has made us being aware of this, so that we have built up capacity both in Europe, also factories in the US and Australia is under construction. So we are actually able to secure that we are able to deliver on the demand we see now in our order backlog, but also looking into the prospects going forward in the next few years.
So in the next few years, where do you also see the regions, I guess, that represent the biggest opportunities for some of your new missile sales beyond current NATO members?
I think we think that the most growing area for us is Europe. US is very important as well. So those are the two main regions. At the same time, we see also countries like Australia, Japan, Canada, they are ramping up and buying our missiles. So I think those areas are also of very much high interest to us. But we definitely will see a ramp up in many countries, but particularly in Europe. And at the same time, we will also see a ramp up in US, as I think it will be.
Mr. Lie, the French defense firm Safran is in talks actually to buy sea drone firm Exel. Did you consider making a bid for Exel?
No, I cannot comment on those M&A activities. We have stated that we look at M&A as an active tool to support our growth ambitions and also to support what we are doing. But I cannot comment any specific alternatives in this case.
Understood and fully respected. But if you were to buy something, in what space would you be looking at?
We have our core products. That is air defense, missiles, remote weapon stations, anti-drone systems. So everything in that category could be of interest. At the same time, we look at two new frontiers, like the space, or we call it space for defense. But at the same time, we also see that underwater domain, underwater warfare, is definitely of high interest to us, especially with Kongsberg having a technology backbone for underwater technology. So those two frontiers are definitely also of our agenda.
With increasing production volumes, what does it mean for pricing? Does it stay favorable, or are the conversations with governments more difficult?
No, I think we have a very professional dialogue with the different customers and governments. Normally when you scale up, we could be able to take out cost to be more efficient, so that is good. At the same time, we want to secure that we also are building the future by investing into new products, R&D, and do innovative things to support what we are doing. So this is a combination, and we try to be stable on the price levels.
Where is your biggest supply chain risk right now?
No, I think in general, our main focus every day is to deliver of our quite huge order backlog. And if we control ourselves, which I think we are doing quite well, we need to secure that the supply chain is working together with us. So our daily work is to actually secure that our suppliers are able to ramp up, invest enough, and deliver to us. So our plan and what we are doing right now is to build up capacity in 3 regions, being Europe, being US, being Australia, to secure that we have multiple sources for many of the things we need as part of our supply chain. So I think that gives us a more robust and resilient supply chain so that we can deliver on our promises to the government and customers.
And so when you're looking at your margin expansion, how will that change in the upcoming years?
No, our expansion will probably be in all these places where we now have production, and we will also hire more people around the globe, especially in these 3 regions, to be more local in the different places. I think that's also a demand from the governments and customers to be able to be more localized in different countries.
Mr. Lie, when you look at all of the opportunities but the challenges, I mean, nothing is really great to come out in terms of wars and instability. What do you worry about the most, actually, concretely?
No, I think we all hope for a peace in Ukraine on fair terms, because that will be in all interest. But definitely the geopolitical setting with all the different conflicts and things that are going on, I think it's really important that we continue to build up the capacity for defense in each of the countries, especially in Europe, to step up and continue the path we are on. It's difficult to predict the world in a few years from now, but I think the best we can do is to secure that we have a defense that could really make a difference, and to tackle the different situations we might end up in.
Thank you so much for joining us today. Eirik Lie there, the Chief Executive and President of Kongsberg. Coming up, we'll be joined by Jeremy Allaire, Chief Executive of the stablecoin issuer Circle. We'll discuss the company's new blockchain project and how it's faring 1 year since making its IPO. That's coming up next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. South Korea unveils a record spending plan for AI, with Samsung and SK Hynix set to invest more than $500 billion. The U.S. and Iran reportedly back away from a fresh escalation of their conflict, with negotiations set to continue this week in Qatar. Plus, Andy Burnham will pledge the biggest devolution of power in recent English history in his first major speech since confirming his intention to replace the UK Prime Minister. Now, the European Union's trade chief is meeting his Chinese counterpart today as the bloc pushes Beijing to address a widening trade imbalance. Now, the talks come days after EU leaders ordered the Commission to start preparing possible defensive measures. To assess the state of negotiations, we're now joined by Bloomberg trade czar Brendan Murray. Brendan, thank you so much for joining us. So what is on the agenda for both sides?
Yeah, look, the European Union is taking it really from both sides now. We had Donald Trump on Friday going after their digital services taxes, and now we have these talks taking place in Brussels to where the escalation, or at least the rhetorical aspect of the relationship between Brussels and Beijing is really starting to deteriorate, and both sides are trying to draw some lines over which neither one wants to really cross, and that is a full-scale trade war. And so the Chinese have come into this with the attitude of, we can outlast you, we have a pain tolerance that's greater than yours, we don't have the dependence that you do on critical minerals. And so the Europeans are really facing a difficult task at the moment. All the while, the auto industry, the German auto industry in particular, is announcing tens of thousands of layoffs. And so the pressure is really building on the Europeans to do something to counter this wave of Chinese imports that are just making the trade imbalance get bigger and bigger.
Brendan, Chinese state media has accused the EU of a lack of sincerity in the preparatory talks. So we also have this EU talking about defensive measures. What is the current state of EU-China trade relations?
Yeah, I mean, look, it's the EU did put some tariffs on all electric Chinese-made vehicles, and that did have an effect. But there are all these other sort of hybrid vehicles where China's market share is growing rapidly, and so we could see some issues like tariffs. The Europeans are also talking about diversifying their supply chains. That was something that the G7 industrial nations had agreed upon a few weeks ago, and so the message from the Europeans is basically we need to de-risk, diversify away from China, and to China's ears that strikes a protectionism, and that will trigger some more offensive measures from China if that's what the Europeans decide to do.
Brendan, thank you so much. Brendan Murray there with the very latest, of course, on EU-China. Now, key stablecoin player Circle is preparing to launch its own blockchain project called ARC. Pre-sale investors in the tokens include Wall Street giants like BlackRock and Apollo. It comes as a crypto firm looks to overcome headwinds in the sector since its IPO last year. Well, with us now is the chief executive of Circle, Jeremy Allaire. Jeremy, I'm so happy to speak to you because actually there's quite a lot going on in your space. You're doing quite incredible things. When you look at your ARC token designed for your ARC blockchain, when will that launch?
So what we've said is, ARC has gone through a period of testing, and we are, getting ready for liftoff, as we say. The mainnet launch, which is sort of the full commercial launch, is coming soon. We've had hundreds of companies working with us as we've built this, and of course some of the leading payments companies, capital markets companies, asset managers, digital asset companies. So we're gearing up and very, very excited about the upcoming launch.
So how do you think it will actually be used?
Well, one of the things that we've had the benefit of is we've been working in this space for 13 years. We've watched as this technology has matured from very, very raw early technology to where we are today, and ARC represents what we believe is a sort of fourth generation of this technology. And it really is a departure from what I like to broadly call like the early adopter speculative phase of this technology, and now moving into more of a mainstream scaling phase where it needs to be designed with the needs of major financial institutions in mind. And so ARC, I think, to your question, is going to be used by banks, by major payments firms, by asset issuers, asset managers, but also builders and startups. One of the things that's been most interesting about the testing period is that an enormous amount of the startup builders who are coming and building on ARC are building agentic applications. They're using AI as a primary way, not just to build, but actually they're building systems for AI to interact with all this on-chain financial infrastructure. And so it's both the traditional space that are bringing their products into the on-chain world, and that's across nearly every segment and geography, and it's this whole new wave of startups. who are AI first in what they do. Yeah. And so that's one of the things that we're most excited about. And we've built the infrastructure to be in a very purposeful way for the agentic economy.
I mean, you've had some really impressive participants in the token pre-sale, right? We're talking about BlackRock and Apollo. I mean, they're investing in it now where crypto is going through, I guess, a bit of challenges because they want to use it for themselves, or are they seeing opportunities for everyone else as well?
Yeah, I mean, look, I think, the trading of speculative cryptocurrencies is very different than the development of blockchain technologies. Right. And I think, every single week, nearly every single day, what we're seeing is major financial firms, and this is in every country in the world, are upgrading to use on-chain infrastructure. And so while the kind of early adopter speculative cycle might not feel great to those that have spent their time on that, the maturation of this as an infrastructure, this what we call the internet financial system, this infrastructure is here. Governments are all figuring out how to enable the firms in their markets to safely interact with it. And so I'm more constructive than I've ever been about how this technology is actually being used for real-world activity, whether it's real-world assets coming on-chain, payments activity coming on-chain, and now agentic activity coming on-chain.
How big will this be for you? How much will it improve profitability?
Well, we haven't given specific guidance on how ARC will kind of shape our financials. We did share with the street in our last earnings that we would be updating our guidance in an upcoming earnings report. But what I would say, and what I can say is, this is a very significant new platform initiative. It's been in the works for a couple of years, and we view it as one of the largest opportunities that we've ever had, and it could be as large as USDC itself. And so this is a major, infrastructure platform that we think, as an economic operating system, can undergird an enormous amount of how the economy becomes fully digital and how the economy comes natively onto the internet. So we view it as a huge opportunity.
It also means that you just have much more offerings, right?
Yeah, I mean, we've really, this is an interesting kind of thing to think about. When we went public a year ago, we were the stablecoin network, right? And that is the heart of the business, and it is huge. But since going public, we've launched a payment network, CPN. Mm-hmm. We've launched ARC, we're in the process of launching ARC, I should say. These are two major new platform pillars that both, represent significant expansion of the role that we play. And we've launched our agent stack, which was a more recent platform launch, which is really bringing us into the whole realm of AI agents, helping people who build them and operate them.
Jeremy, a lot of your support still comes from Coinbase, but I guess it's not exclusive, right? So they could decide to go, support another stable coin or things like that. How do you think about that?
A couple general thoughts. I think one is there's an enormous amount of what I like to call co-opetition in this industry. But
I like that co-opetition.
Co-opetition, yeah. That's I forget who came up with that, but and you see this in lots of tech sectors. You see, for example, Anthropic buying from XAI, or Google buying from Anthropic, and Microsoft buying from all these different players buying each other's, using each other's infrastructures, platforms, etc. And we've seen that in cloud. We've seen that in consumer internet. Google wants their apps on the iPhone. All these things. So in this space, as we become a full stack platform play, where we're at the infrastructure level, the application level, the digital asset level, we're going to collaborate and cooperate in a lot of different places. We're going to support other stablecoins besides USDC on ARC and in our payment network. We're going to put our own assets on lots of competing blockchains, even if we're in the blockchain space ourselves. And so there's going to be a lot of co-opetition. For us, with our core digital assets, USDC and EURC, for example, we've done a very good job of building a wide range of partnerships and distribution partnerships. We have partnerships now with so many major companies around the world who are distribution partners on our network, and you're going to continue to see that expand as more mainstream companies get involved. And so that is sort of how the market looks today.
Would you ever renegotiate with Coinbase, or do you see that as something that may have to happen at some point, and under what circumstance, or how would you renegotiate?
What I would say is, we have a very strong relationship with Coinbase because we're both focused on the growth of the USDC network, and we're both incentivized to drive that growth, and we work together all the time to make sure that this network can continue to grow and have great partners in it. And so there's a lot of collaboration that goes on there.
I know you're a little bit of I don't know if it's a Windstop tour in Europe, but what are people asking you the most? I know when you sat down, we were talking, you were saying, look, it's the fact that we're going through this agentic life where we'll have agents on our behalf acting. What does it mean for your industry?
It's a fascinating time, obviously, on so many levels, but something that we've been paying really close attention to for a couple of years, but now in the last 6 months we've seen really start to accelerate is this ability for companies and developers, people who build solutions, to kind of decompose cognitive work into AI agents. And that's accelerated at an incredible pace. You're seeing organizations look to transform themselves by deploying agents inside their organizations. Mm-hmm. We're doing that at Circle. We're deploying agents in every single business function. But we're also seeing an agentic economy develop where agents are being built that themselves can offer services to other agents. And so we see a huge opportunity there. We see an opportunity for all of these builders of AI systems to have a new system of monetization using transactions that are orchestrated on blockchain. So agents themselves need an economic substrate to work with that works everywhere in the world, that can do a transaction from sub a penny to large, and that is essentially built for machines and machine programmable infrastructure. So something like Arc and on-chain infrastructure are really purpose-built for this age of agentic. And so this agentic economy theme is going to keep coming up on many levels. And so that's absolutely been on a lot of people's minds.
As I'm sure. Jeremy, thank you so much for the terrific briefing also so that we understand what you're doing a little bit more. Jeremy Allaire, they're the chief executive of Circle. Now, coming up, we have a new report highlighting the key pressure points facing the global economy. So we'll unpack the findings next, and this is Bloomberg. Welcome back, everyone. Now, Kevin Warsh and 3 other veterans of the 2008 global financial crisis are sharing a stage this week at the European Central Bank's annual symposium in Portugal. Now, it's the new Federal Reserve's chairman debut public appearance outside the U.S. since taking office in May. Now, we're joined by Jamie Rush, Global Economics Director at Bloomberg Economics. Jamie, it's going to be exciting. We really want to hear from Warsh. He's the new guy in town, and he'll maybe try to say as little as possible in Sintra.
Yeah, and we're still getting to know Kevin Warsh, right? We know that he's not a sock puppet, as he was accused of being before taking the position. He's endorsed, or at least he seems comfortable with keeping rates where they are. But what he has told us is that he doesn't want to tell us anything. He doesn't want to tell us what the future holds. He doesn't believe in forward guidance, which is one of the central tenets of central banking over the past 10 years. He doesn't want any of that. So he's not going to be telling you what he's going to be doing with rates. But I think actually we may just, because it's central bankers, because it's central banking, we may get a flavour of that debate, actually, because on his side, he doesn't want to tell you anything. Lane, Lagarde, they'd prefer to do forward guidance still in some sense. So there's going to be a bit of a clash, and we can see where they lie. Yeah,
I'm looking forward to actually the big panel discussion. There's also been a lot of discussion among central bankers about how AI changes our economy, the impact on jobs and inflation. Is it a bit too soon to really delve into it?
No, they're going to be delving into it. And there's also, it won't be just jobs and inflation, it'll be productivity as well. I mean, that's how they'll map to inflation, looking at jobs and productivity. And what we see at the moment, of course, is that you've got all the spending with the AI boom pushing up demand in the economy, but none of the productivity gains yet, or very small productivity gains. And so they'll be considering that. They'll also be considering economic sovereignty. We used to think it was enough just to piggyback on US innovation. Actually, when it comes to economic statecraft, they can't do that because you can switch off the models. So there's a lot of stuff to talk about, financial stability as well. So AI is going to be the dominant theme of the meeting.
Thank you so much. Of course, Jamie Rush from Bloomberg Economics. And then we're live in Sintra from tomorrow. We have some great guests lined up, including the ECB's chief economist. And then I'll be speaking to the heads of the central banks of the Netherlands, Belgium, but also Finland. Now, as policymakers at Sintra prepare to discuss the dangers facing the world economy, a new report highlights the biggest threats to global prosperity. They include an AI bust, inflation, and fiscal stress. So let's get straight to Frank Smets, acting head of the Monetary and Economic Department of the Bank for International Settlements, which published the report. Frank, thank you so much for joining us. If you look at the sustainability of the AI boom, what do you worry about today? Is it the same thing that the markets, or is there even a longer-term impact on what this could do to financial stability?
Well, clearly, I mean, the AI boom has many advantages. And I mean, it is a big change to how we work. It will affect productivity, and it has affected economic activity already through the investment boom and through very rich equity markets. What we point to in the report is that this also comes with vulnerabilities. We make a comparison with previous innovation booms, and most of those have led to some type of overinvestment as there is a race for market share. Secondly, these booms, because they happen so fast, can also run into supply constraints, and we do see that some of the prices of the materials that go that are inputs are rising, like the price of memory or microprocessors. And then finally, one of the things we point out is that, of course, over the past 2 years, this boom is more and more financed by debt. So it becomes leveraged, often through private credit. It's not always very transparent where the credit risk lies.
So if you look at some of the things that you were explaining, if you look at, safeguarding price stability, ensuring fiscal sustainability, what does it mean for policy? What do they need to be mindful of?
Well, I mean, we are in a world where, there's much more price volatility, particularly in energy markets. And what that means for central banks is that they need to focus on medium-term price stability for the benefit of the general public. Now, what it actually means in terms of interest rates varies across countries because initial conditions are very different. But there is this trade-off between, on the one risk is that they raise interest rates too much, and that has then a negative impact on financing conditions and the economy. The other risk is that they increase interest rates too late, and then inflation takes off, becomes persistent, and then they have to react much more strongly later.
So, which is what you're calling for policy discipline, and it changes by, region by region.
Exactly. Central banks particularly should focus on what for most of them is their primary mandate, which is price stability, keeping prices stable.
Mr. Smets, we just had a great conversation with the chief executive of Circle. How do you look at stablecoins? Are they a longer-term risk to financial stability?
Well, in our report, we do look at the future of the monetary system in the digital age. And we think there needs to be cooperative efforts along two tracks. One is indeed to address some of the weaknesses of stable coins to make sure that they're trustworthy as money. And secondly is to bring in the tokenization into the two-tier financial system. So make sure that in the digital world also central bank money can be used as a safe settlement asset.
So, I mean, is it regulation that needs to happen, or how do you see the way forward for this?
I mean, it depends very much, but there is, on the one hand, regulation, and the authorities need to decide whether they want to make stablecoins more money-like, in which case redeemability at par is very important. In that case, also preventing illicit finance will be very important, or whether they want to have stablecoins more like securities, so like tokenized money market funds. So that in that case, it would be like an investment asset like any other one.
Mr. Smets, what's the BIS working on? If you look in general also about AI valuations, I mean, there's a number of things that we can worry about. I mean, what's your the game plan that's more likely in the next 12 months?
I mean, what our task is, of course, is to point to some of the risks. Equity valuations are quite stretched. Credit risks are tight. And as I mentioned before, there's increasing leverage in the financing of the AI boom. And so for supervisory and regulatory authorities, that means, on the one hand, that in terms of supervision, some of the credit risk exposures need to be addressed and need to be made transparent. On the other hand, we also argue for what we call congruent regulation. Basically, it means that similarly stringent measures are applied to similar risks, whether they take place in the banking sector or in the non-bank financial sector, like through hedge funds.
Yeah, and this is, you also have in your report the fact that the expanding role of non-banks could amplify and I guess accelerate the transmission, for example, of market stress. How much of a worry is this?
Yes, we have a special chapter on exactly this interplay between high government debt, near record high government debt in many advanced economies, and the increasing role of hedge funds, which are highly leveraged investors in those government bond markets. And when financing conditions are relatively easy, as they are now, then actually that helps the financing of government, particularly in a time when central banks are withdrawing from holding government debt. But when times change and you have shocks to financing conditions, then that liquidity can dry up very, very quickly. And so it's this type of fiscal risk repricing events, as we call them, that worry us.
Okay, thank you so much, Mr. Smets. Frank Smets, they're acting head of the Monetary and Economic Department at the Bank for International Settlements. Now, Serena Williams will make a surprise return to Wimbledon this week after being given a wild card. The 23 Grand Slam winner has not played a competitive match since 2022. She's scheduled to take on world number 53 Maya Joint on Tuesday, and her comeback was welcomed by the former men's world number 1 Rafael Nadal, whom I sat down with last week. Serena Williams is returning to Wimbledon. What do you think about that?
Great news.
Why?
Because if she's coming back, it's because that's what she wanted, because she doesn't need it at all. So it's a great news for her that she's committed to go on court again in a professional stage, and because the best female athlete of our sport it's on court again, going to be very, very positive for the fans.
Will you watch?
Yeah, of course.
And you can see the full conversation with Rafael Nadal on the next episode of the podcast Leaders with me, Francine Lacqua. Subscribe wherever you get your podcast, but also catch it on Bloomberg TV next Monday. Up next, it's a Bloomberg Brief, and this is Bloomberg.